A very good evening to you all, and welcome to the 14th episode of Market Replay. If you're tuning in for the first time, I'm your host Koketso Ditlhakanyane, founder and chief technical analyst at Ace Forex Academy. Just to give you a brief introduction into this series, what I seek to do is share my perspective and my understanding of how to understand price information, as well as how to act or trade that particular price information you have based on the understanding that you have attained. How I will be doing that is that I will be reviewing a day's worth of price information in the form of candlesticks, and I'll be highlighting the different trading opportunities that were presented to us and how we would have taken those particular trading opportunities in conjunction with the Ace Forex Academy specific candlestick momentum pullback trading strategy. For today's episode, we'll be looking at market data from the 27th of July, which was this past Monday, and the currency pair we'll be looking at is the euro against the pound. To not waste any further time, we shall continue. Like with every other video, I'd like to start off by identifying the trend, and what we can then see is that the euro opened up on a very bearish candle and price continued to move to the upside. And then we were given a pause, right? And we know that pauses are our favorites because they give us opportunities to enter the market. Okay, so we were given this pause before the breakout, and then the bulls continued to push price to the upside, right? Where the move was no longer sustained for any longer, and then we had the bears kicking in, right? Price continued to push to the downside. Okay, but that then didn't last longer, and the bulls then came in and pushed price to the upside. Okay, the bears then kicked in, and this move summed up our day, where we then had another period of consolidation. Okay, and that was our trading day for the euro against the pound. Now let us just drill into these consolidation zones and understand the different price setups that were given and the trading opportunities. Starting off with the first zone, like I have been highlighting in previous episodes, if you have not watched them yet, I please recommend you to do so. They're very insightful, and you can follow the process and the method behind everything that I do here, right? So first of all, we're going to start off on our left, and by starting off on our left, what we're going to do is mark out our area of resistance. Okay, and our area of resistance then enables us to forecast a area of supply. And understanding the basics of supply and resistance, what we then know is that our area of supply then tells us that we have a lot of sellers parked within this region, because price is considered to be expensive enough to be sold for a profit, right? Which is the main aim of trading. You want to buy and sell for a profit. Okay, so you buy when it's cheap and you sell when it's expensive. So you sell in your areas of supply. Okay, that understanding will then pull out our modified Fibonacci tool. And what we then said is that with this particular strategy, we are just looking at having retracements that far exceed 50%, and we can then see that we have that with the close of this bearish candle, right? And what that close then indicated to us is that we needed a close past that high before we could take a buy position, right? Let's go back to our Fibonacci tool, and we can then see that we had a close past that high, and with the forecast of our different TP areas or take profit areas, what we can then see, the minimum that we strive for, which is 1:1, sits within our area of resistance. Okay, and 1:2 far exceeds that. All right, so 1:1 was very attainable, but of course one needed to be very conservative and very careful all right, when taking on this particular trade. Okay, and as you can see, we took a buy position on this pair, and price then continued to push, giving us our 1:1 risk reward ratio. And once it was hit, we then placed a positive stop, and price continued to push to 1:2. So this was a very rewarding position that we took, right? For the euro against the pound, we saw weakness in the pound with the euro pushing upwards and delivering a good 1:2 risk reward ratio trade for us. And it's that simple, right? Understanding price and not overcomplicating things. Okay, let's move on to the next consolidation area, which is the one that we have right over here. Let's drill down lower, and what we can then see is that we have the same story as what we have over here. So number one, what you want to do is start on your left hand side, and by starting on your left hand side, what you are then doing is you are enabling yourself to forecast the past into the future, right? And this time it's in the form of a area of support, which then represents our area of demand. So we know that buyers are parked within this particular region because price is considered as being cheap enough for buyers to then enter the market and increase the demand for CFDs. Okay, so with that understanding, we then pull out our modified Fibonacci, all right, and we forecast this in time move to the downside. And like I've always said, we are only interested in closes that far exceed 50%, right? Retracements that exceed 50%. And with that, we can then see that we needed a close past this low before we could take any position. Okay, let's forecast this close to the downside, and let's have a look. Right, this was a very good sell that we took, right? Number one, we can then see the minimum risk reward ratio we strive for of 1:1 was far above our area of demand, right, or our area of support. And the 1:2 as well was far above that, right? So this trade was very safe to take because we had no historical turnarounds that were probably going to distract or try and pause price movement in our direction. Okay, so we took this sell and we managed to walk away with a 1:2.5 risk reward return on this particular trade, because as you see, price then gapped down, showing that the movement towards the downside was very strong, right? And then price then continued to gap down and they pushed price down further. And that's how we took this particular sell on the euro against the pound. Okay, let's go back to our overall picture of the markets. What we can then see is that we had a very bullish day for the euro against the pound, with the pound showing some weakness and the euro showing some strength, but we had a fair distribution of trading opportunities on either side of the market, right? And that being our sell side and our buy side. Okay, with this particular pair, we had two opportunities presented, and both opportunities then gave us very rewarding trades that far exceeded 1:2. All right, ladies and gentlemen, that then brings us to the end of this episode. If you liked this episode and you found it very insightful and it added knowledge to the way you see and understand the markets, please do like the video. If you'd like me to review a certain currency pair in future, please do drop your suggestion in the comment section of the video. If you haven't subscribed, please do subscribe. And if you are in the process of subscribing or you have already subscribed, please do hit the bell notification icon so that you can be alerted the next time I upload a new episode. Ladies and gentlemen, thank you so much for tuning in to this episode. I'll catch you on the next one. Cheers.